A couple of weeks ago, I published a video that I've provided a link to in the description and will appear at the end of this video of how early retirees can drastically reduce their health insurance costs by getting amazing subsidies from the Affordable Care Act marketplace just by controlling their reported income by being strategic about how they are funding their retirement with a taxable brokerage account, in particular being the Superstar. That video really took off, and some viewers requested in its comments that I create a video of what ACA premiums look like for people with different retirement incomes and how things change if you're not strategic about where your money for retirement comes from. So in this video, I'm going to do just that. I'll walk you through 3 early retirement scenarios and demo them using the free ACA estimator on healthcare.gov. In each scenario, I'll show you the result of the difference strategic planning makes in your ACA health insurance premiums, deductibles, and out-of-pocket max, as well as other benefits, versus the result when you're not strategic and it wipes out a lot of those savings. Before we get into the thick of it, let's define a few things for those that have not seen my previous video or are just not familiar with these terms. First, your modified adjusted gross income, or MAGI, is what the ACA uses to determine whether you qualify for subsidies and other savings. It includes most forms of income like IRA and 401k withdrawals, capital gains, and dividends. But it does not include withdrawals from a Roth IRA as long as they're qualified. That means the Roth account has been open at least 5 years and you're either over age 59 and a half or meet another qualified exception like permanent disability. But for most early retirees aiming to keep income off their tax return, what is easy to remember is the Roth has to be open for 5 years and you must be over 59 and a half to withdraw any earnings tax-free. As your contributions, you can always withdraw tax-free. MAGI also doesn't include HSA spending or the return of your original after-tax contributions from a taxable brokerage account. So if you're strategic in early retirement, say pulling money from a taxable brokerage account and perhaps also funding your retirement some from your Roth, you can keep your MAGI lower and qualify for much more affordable health insurance. One last thing, for consistency between the scenarios I'll be showing you in this video, I'll be using the healthcare.gov estimator and setting the zip code to 50309, which is a Des Moines, Iowa zip code. But keep in mind, ACA premiums vary by location, so your own zip code might produce different numbers. That's why it's so important to use the estimator for yourself, and I've included a link to it in the description. Also, one more quick note before I launch into the scenarios and demos. For simplicity in each scenario, I'm just going to show you the first bronze and silver plans shown by the ACA estimator, as the point of this video isn't to compare insurers, it's to show you your retirement funding strategy changes your coverage costs. First scenario, let's start with Sarah. She's planning to retire this year at 56 and is going to live off a mix of dividends and withdrawals from her taxable brokerage account to keep her MAGI around $22,000. So I'm going to first input her zip code in the ACA Marketplace Estimator tool, 50309, and select the match from what shows up. I'll click Continue. So now it's asking me to tell them about my household. So I'll click Start. If I were previously enrolled in an ACA plan, I get prompted to enter the plan ID and it will highlight that plan in comparison to other plans, or you can skip. I'll click Skip, of course, as this is a demo. It's just Sarah in this household. And I'm going to enter the details and not skip down here because I want the estimate to be as accurate as possible. I'm going to enter Sarah's age of 56. She is female. And I don't need to check these options for legal parent or guardian of child under 19, eligible for health coverage through a job, pregnant, tobacco user. So I'm going to click none of these. And it's only her, no spouse or dependent. And her estimated income is she's going to keep it at $22,000 for her MAGI. based upon her retirement income funding strategy. After inputting that, it estimates Sarah's premium tax credit or subsidy to be $749 per month. That's really good. Now let's look at the message that I'm getting below the subsidy amount. It says you may be eligible for extra savings if you pick a silver plan, and this is in addition to the tax credit to lower your monthly premium. It appears you qualify for extra savings on other costs like deductibles, co-payments, and co-insurance. This can save you hundreds or even thousands of dollars if you use a lot of care. What this message is addressing is the additional cost-sharing reductions you can receive when your income falls between 100 and 250% of the federal poverty level for your household size, which Sarah does and is why she is getting these. These additional cost-sharing reductions are only available on silver plans. What are the FPLs for 2025? Let's take a look, and I'll include this link in the description. So the 2025 poverty guidelines for the 48 contiguous states, for a household of one, 100% of that is $15,650 and 250% of that is $39,125. So with an estimated MAGI of $22,000, Sarah is well within that and getting the cost sharing reductions. This document also includes Alaska and Hawaii. You just have to scroll down further. And Alaska and Hawaii have their own because they have a higher cost of living. Going back to our estimator, let's take a look at the plans. And I'll skip past this, so that just tells you how you can filter and things like that to compare plans. Let's first look at the bronze plans to compare them with the silver plans. So I'm going to add a filter, and I'm just going to look at the bronze plans to start with. And in this very first bronze plan, we see she has a premium of $0 per month with a $4,700 deductible and a $9,100 out-of-pocket maximum. This $0 per month premium is due to the $749 tax credit. Otherwise, the plan normally would cost $596.45. We can also see that she would pay $70 for a primary care visit and $125, for example, for a specialist care visit. So let's look at the silver plans, as she does qualify for those cost-sharing reductions. So over to my right here, it even tells me that again, that I'm qualifying for extra savings. So I'm going to click See Silver Plans, and let's see the difference. Now look at the change with the silver plans. Still a $0 per month premium, but now look that her deductible is $0. That's amazing and a huge difference. And her out-of-pocket maximum went down to $1,850. And look at the primary care visit. It was $70 per visit on the bronze plan, but is now $5 per visit. And for the specialist care, which was, I believe, $125, is now $10 per visit. So that is a huge, huge difference. All right, now let's do this again for Sarah, but this time she's going to fund her retirement totally from her 401k and nothing else, and let's see the difference with that. Since she will only be 56 when she retires, she'd usually face a 10% early withdrawal penalty for withdrawing from her 401k before age 59 and a half. But there's an exception known as the Rule of 55. That rule says if you leave your job in the year you turn 55 or later, you can withdraw money from your employer's 401k without penalty. You still pay ordinary income tax on the full amount you withdraw, of course. So let's rerun the estimator with this information in mind. I'm going to go back to edit her information. I'm going to view the steps so I can change her estimated income. Now we're going to change that to an estimated MAGI of $55,000 because she's going to fund her retirement totally from her 401k. Now, when I do that, I'm still getting a subsidy, in this case, of $399 per month. But notice I'm not getting those extra cost sharing reductions. I'm not getting any messaging regarding that. And that $399 per month is quite a bit less than the $749 subsidy she was getting when she was being strategic about funding her early retirement and reducing her MAGI. Let's click View Plans. And in the first bronze plan I see, now it went to $124.24 per month instead of $0 that we saw when she was being strategic. And we have a $7,500 deductible, $9,200 out-of-pocket max, $50 per visit for primary care, and $200 for specialist care. If I click the filters just to view the silver plans, an even more drastic difference because I'm not getting those cost sharing reductions. Now the premium is $346.52 per month with a deductible of $5,500 and an out-of-pocket max of $8,600. And we can see that the higher premium did reduce our primary care and specialist care costs per visit. So this illustrates dramatically how being strategic to reduce your MAGI makes a huge difference in what your healthcare costs are going to be. All right, let's move on to our second scenario. Now we have Brad and Maria married and are both 60 years old. They are planning on retiring this year and are funding retirement from their taxable brokerage account and estimate their MAGI to be $38,000. So I'll run the ACA estimator to input their details. So I'll input the same zip code as I did before. And for their household, no plan ID from last year. It'll be both of them. They are married, of course. No dependents. Maria is 60 years old. And so is her husband. And their expected income or MAGI is going to be $38,000. And I can see they're getting a subsidy of $1,696 per month. They're also getting the messaging about extra savings with the silver plan. That's because they're qualifying for those cost-saving reductions because for a household of two, 100% of the federal poverty level is $21,150 and 250% is $52,875. So with a MAGI of $38,000, they're qualifying for those cost-saving reductions. Now I'll go back to the estimator and click View Plans. And looking at the bronze plan, I can see that they have a $0 premium, and they have a $9,400 deductible and $18,200 out-of-pocket max. Their primary care visit is $70 per visit and $125 per visit for specialist care. But again, they qualify for those cost-saving reductions on silver plans. So let's look at that. So if I click See Silver Plans, I can see that their premium would be $38.54. But wow, look at their deductible. It's now only $1,200 with an out-of-pocket max of $6,000, which is much different. And for primary care, they only have $10 per visit instead of $70 and $35 for specialist care. So that's quite a bit difference in savings. Now, let's see what happens when John and Maria are not being strategic and they are going to fund all of their retirement from their 401ks and will report a MAGI of $80,000. So I'll edit their criteria for that. So I'm going to click View Steps. I'm going to edit their income, change it to $80,000, and we'll see what happens. So now we can see that the subsidy changed from $1,696 that they were getting earlier to now $1,189 per month, because now they're out of the 100 to 250% FPL range for those cost sharing reductions on silver plans as well. So I'm not getting any messaging regarding that. Because remember, 200% for household of two, 250% for a household of 2 is $52,875, so $80,000 is well above that. I'm going to click View Plans, and in doing that, in the first bronze plan that I'm seeing, I can see that instead of the premium being $0 per month, it's now $28.36 per month, with a very high deductible of $15,000 and an out-of-pocket max of $18,400. And if I go to the silver plans, so I'll just add a filter here, I can see that their premium is now $545.54 per month, with an $11,000 deductible and $17,200 out-of-pocket max on the first silver plan I see. So you can see I'm not getting those amazing cost sharing reductions anymore. All right, last scenario. We have Tom and Elaine. Tom is 56 and Elaine is 61, and they plan to retire this year. They have a daughter age 20 that will need to be covered by their insurance. They estimate their MAGI to be $50,000, mainly from selling shares in their brokerage account. So I'm going to input their information, use the same zip code for all my scenarios. So no plan ID, you and other people. They are married. They will claim a dependent of 1. We have Tom is 56 and his wife Elaine is 61 and their daughter is 20. And they're going to have a MAGI of $50,000 by making strategic withdrawals to fund their retirement. And we can see that they're getting a whopping $1,888 per month for their subsidy. And if I view the plans, on the first bronze plan I see a premium of $0 per month with that subsidy and a $13,000 deductible and $18,400 out-of-pocket max. And I can see the primary care and specialist care amounts as well, for example. So they're getting those cost-saving reductions because a $50,000 MAGI is within 100 to 250% of the FPL for a household of 3, which is, and we'll look at it here, household of 3 is $26,650, and 250% of that is $66,625. So they're well within that. Because they qualify for those amazing cost-saving reductions, I'm going to look at the silver plans, and I can see that with a premium of $65.43, that deductible goes down to $1,200 with a $6,000 out-of-pocket max. So that's a huge difference. So $1,200 as opposed to $13,000 for the deductible and $6,000 for the out-of-pocket max versus $18,400 on the bronze plan we just saw. And I can also see for primary care and specialist care those costs as well, which are drastically reduced. Now, if we change their MAGI to $100,000 in the case that they're not being strategic about how they're funding their retirement and fund their retirement entirely from Elaine's 401k as she's older than 59 and a half, let's see what happens. So I'm going to view the steps and edit their household income, change this to $100,000. By doing that, I can see they're still getting a subsidy of $1,279 per month, but that's instead of the $1,888 they were getting. And if I view the plans, I'm not getting that message about the cost savings reductions on silver plans. And I can see that instead of the premium being $0 on the first bronze plan I see, my premium is $92.01 with a high deductible of $15,000 and out-of-pocket max of $18,400. And I can see the cost for primary and specialist care visits as well. If I run a filter to look at the silver plans, As you might guess, it's going to be substantially more expensive to get a lower deductible and lower copays. And I can see now that the premium has jumped to $674.43. So that's a drastic change when I lost those cost savings reductions. So those are the three scenarios illustrating how controlling your MAGI by strategically funding your retirement makes a huge difference in your healthcare costs. In each of these scenarios, you'll note that when we increase the MAGI, although they lost their cost savings reduction, they still received a subsidy. Now, you might be wondering, at what income level do ACA subsidies completely phase out? Well, under the current rules extended through 2025 due to the Inflation Reduction Act, there's no fixed income cap. Instead, subsidies are designed to ensure that the cost of the benchmark silver plan doesn't exceed 8.5% of your household income. So even if your income is above 400% of the federal poverty level, you might still qualify for a subsidy, especially if you're older or live in an area with higher insurance premiums. Whether or not these expanded ACA subsidies continue past 2025 will depend on what Congress decides. The current rules came from legislation passed by Congress and signed into law. And while President Trump can influence that process, it's ultimately Congress that has to vote to extend or change these rules. However, even if the current subsidy rules are not extended past 2025 and we go back to the old system where if your income is over 400% of the federal poverty level and you get no subsidy at all, there's even more of a reason to keep your MAGI low in early retirement. Because if you're withdrawing strategically and keeping your MAGI low, you're probably going to fall under that 400% FPL line anyway and still get subsidies. So whether the generous rules continue or not, the core strategy stays the same. Keep your taxable income low and health insurance stays much more affordable. Now, as I mentioned in my previous video that this is a follow-up for, while the lower your MAGI you have in early retirement, the larger your subsidy will be, and you could qualify as well for the cost-sharing reductions we saw in this video. You have to be careful about going too low, especially if you're in a non-Medicaid expansion state like Texas, Florida, Georgia, or South Carolina, and your reported income is below the poverty line, because then you could fall into what's called the coverage gap. That's where your income is too low for ACA subsidies, but you also don't qualify for Medicaid under your state's stricter rules. So you could end up with no affordable health insurance at all. If you live in a Medicaid expansion state, you'd be shifted into Medicaid instead of an ACA plan, which is low or no cost. Lastly, I hope this video demonstrated the power of strategic planning and how controlling your MAGI and keeping it low can drastically reduce your healthcare costs in early retirement. And I hope it shows you that healthcare costs don't have to be a barrier to retiring early. You've just got to be strategic about your withdrawal strategy to reduce your MAGI and therefore reduce your healthcare costs. Thank you so much for watching. If you found this video helpful, please hit the like button and share it with others you think may benefit from it too. And don't forget to subscribe for more of my videos, as there's a lot more to talk about. And if you haven't seen it already, watch the video that this one is a follow-up to that talks about funding your retirement with a taxable brokerage account to keep your MAGI low so you can save a lot on your health insurance, just like I've demonstrated in this video. Finally, I'd like to hear from you. If you're planning to retire early, have you strategically thought about how you're going to fund it to keep your MAGI low to optimize getting health insurance through the ACA? And if you have retired early, did you incorporate this in your planning, or do you now plan to after watching this video? And if you're ever on the go, check out my Early Retirement Roadmap podcast, available wherever you get your podcasts, and go to mikeupland.com for all of my media, including my blog. Until next time, this is Mike Upland. Take care and make the most of today.